Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about NZDUSD. Now, why do I want to speak about NZDUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of approaches to the market, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market here has just created this M pattern. Now, in general, after the creation of an M pattern, what you want to see is the market create a nice move to the upside to go and complete the pattern at the previous support, turn resistance. So here in the monthly, we want to see the market create a nice move to the upside to go and complete the pattern itself at this previous support, turned resistance. Going down on the weekly time frame, what we can see is that we just got a very strong impulse to the downside, which is about to close in 1 day and 7 hours below this very strong weekly structure support, which was acting as demand and support here, again here, again here, and at the moment we are breaking below it. And if we will have a confirmed break below this level, what we expect after that is a retest of this previous support turn resistance before the continuation to the downside, which aligns quite nicely with what we already want to see on the monthly time frame. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what we can see is that the market, in creating this move to the downside, has also printed in overextended M pattern. In fact, we can see a move to the upside, move back down, move back up, and then the market melted quite aggressively to the downside. Now, in general, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can identify at 0.32 Fibonacci retracement, which is currently lining up exactly at this area, which is also previous support and resistance, creating a confluence of resistance at this zone that we do expect the market to go and test. Now, we have clearly a first upside target at this level. So from a technical perspective, we have our upside target. We know where we expect the market to create a move to. Now, if we go and see what we have from a COT perspective, so commitment of traders, and we check the data for the NZD, we can see that actually net positions just shifted to negative, meaning that we went from having, from an institutional perspective, more longs than shorts to now having more shorts than longs, with 18.3k shorts and only 17k longs. So NZDUSD is getting quite bearish, and we see that clearly reflected in the price action with this downtrend developing. However, this doesn't mean that a short-term longing opportunity for a retracement before then the continuation to the downside is a low probability scenario. In fact, this is actually a high probability scenario because we haven't seen massive shorting yet. We just shifted to a negative net positioning. So how we will be approaching this potential short-term longing opportunity here with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, we will be monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding NZDUSD to our watch list And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.